What's up, guys? Welcome back to Just Chris Podcast. I'm your host, Chris Carter, and this week's episode, we're going to do a little recap of the Congress hearing for Robinhood, GameStop, Melvin Capital, Reddit, and our boy Keith Gills. So before we get into that, I do want to give a couple little shout outs to some people. If you aren't aware, I have an older sister and I have a younger sister, and my older sister was born on February 20th, 1996. And if you're listening to this episode on Friday as it's coming out, hold on just a couple more hours. It's 9:21 right now. And give her a little birthday shout out, send her a little birthday message. If you do know her, tell her Just Chris Podcast sent her. So Gabby, happy birthday. Next thing I want to talk about is a new Discord chat that I was recently introduced to from one of my good friends, Thaddeus Breckenridge, out of Beckley, West Virginia. And Thad has upped his game when it comes to investing over these past few months, especially since quarantine has started. He's gone hard. You know, he's hit the books heavy. He's been doing his research. And just a couple weeks ago, he came out with a Discord chat and invited a few of us to begin. And it's slowly been growing into something pretty crazy. And with this Discord chat, you know, it covers everything. I'm just going to read off a couple of the channels for you guys. So we have just like a general chat channel for, you know, any general conversation regarding investing, stocks. We then have an AM watch list where every morning Thad goes through and sends stocks to look for, potential movers in the market for that coming day. We have our welcome rules channel where if you're new to the chat, you hit up that one first, kind of like see the deal with it. We got our crypto talk, options talk. We have beginner resources. We have a channel for ETFs only, ones for trading platforms and highs and lows of each one. We have risk management channel on, things to look out for. And then lastly, newly added, we have a news updates channel. And, just over these past few weeks, I've really begun to see it grow into something really crazy. And, I think it has a lot of potential in the future for growth. I will be plugging that channel, I will be plugging that chat in the bio on YouTube and on Apple, Spotify, Google Podcasts, anywhere you listen to it or watch it. It's going to be down below. All right. And to begin this week's episode, I want to say what's up to Bitcoin, because they just recently hit a $1 trillion market cap. Truly spectacular right now. They're trading in the 51s, 52s, low 50s area, and they really got a huge boost after Tesla recently came out, say they are now accepting Bitcoin when it comes to buying Teslas. Elon Musk, put me on your watch list, man, because I'm coming in clutch and getting a Model X, 130,000 all in Bitcoin. Open up your wallets because it's coming, man. On this week's episode, I want you guys to drop some GGs in the chat because your boy has finally done it. I have finally made the jump out of Robinhood, and I'm now a Fidelity guy. I've talked about it, and a few months ago, I had an episode where I just talked on Robinhood and talked on, some of the potential dangers they could face, some of the things to look out for, the potential for the future of Robinhood, and everything aged extremely well in the most sarcastic way. So I made the decision finally. I took my entire portfolio. I liquidated it. I took some fat losses, but I am happy to get out of it. More than thrilled to be out of Robinhood. Now, I think Robinhood is a great beginning platform for new investors, and I would not discredit that at all. I didn't begin on Robinhood. I began investing when I was 17, and I jumped right to Merrill Lynch. And going from no experience straight to Merrill Lynch, a huge learning curve. Like, I didn't understand any of it. But if I were to be introduced to Robinhood earlier, I would have taken advantage of it. But now that, I'd say I'm more an experienced investor and have a grasp on the markets and everything like that, I've aged out of Robinhood. I don't find it all that beneficial. And I think that they go about a lot of things very weirdly. Weirdly? Is that a word? I don't know. But I'm not for Robinhood. 100%. No way. Robinhood's down bad. And one thing I would like to bring up is that we've seen over this past month that Robinhood has severely damaged their brand. A survey was conducted and found that more than half of all Robinhood users, 56% of them, are considering leaving the platform as a result of the fiasco that went down in late January. Now, 40% of users say they aren't even considering leaving. I think you need to reevaluate that decision. Unless you're a new investor, like I said. And then, you get some experience under your belt and you get out of there. You run fast. And then 4% say that they've already left the platform. I'm part of that 4%. Like, I got out of there. And if we were to have listened to Warren Buffett, I'm sure some of us do, he's been preaching this for years. It takes 20 minutes, what am I talking about? It takes 20 years to build a reputation, but 5 minutes to ruin it. And Robinhood, they did just that. Obviously. They are in the wrong, in my opinion, 100%. Maybe. I don't know. In my opinion, I'm no investment advisor. I'm not qualified to give any financial advice. None of that. The whole spiel. Don't listen to me. All right. Another survey was conducted where investors were asked to rank their views on 11 different financial firms. Among these 11, Robinhood was the only one to have a negative favorability score of -1. What's even crazier about that is that our boys over there at Wells Fargo, they finished +3. Now, Wells Fargo, didn't they just recently go through some crazy scandal where they were creating fake accounts to compensate or overcompensate for crazy sales incentives? Yeah. Were people losing a ton of money? Yeah. Did they still finish above Robinhood? Yeah. That's absurd to me. And you are down bad when you lose a popularity contest to Wells Fargo. They lost to Wells Fargo. Now, people have different opinions about Wells Fargo, but if we're just looking at the facts here and we're looking at their most recent scandal that had been going on for a while, and you still put them over Robinhood, that says something. Robinhood is indeed down bad. And I've conducted research on the Wells Fargo account scandal, and I would love to hit on that on a further or future episode, which I gladly will. But until then, we're not getting there. Today we're talking about the hearing that just went down on Thursday, February 18th, regarding a number of witnesses and Congress, okay? So to begin, what I would like to say, I found this hilarious, is that you could actually bet on the Capitol Hill hearing yesterday. If you went to mybookie.com, you could bet on things such as if Steve Cohen would be mentioned, if Elon Musk would be mentioned, how many times terms like gamification or stonks would be mentioned, and the figures ranged up, the numbers ranged up to 4 figures when it comes to betting. That's wild. People were betting on this. It's just so simple. And MyBookie is an offshore gambling company. I'm not 100% on where they are, but they're not in America, okay? And for this Congress hearing, it was members of the House Financial Services Committee questioned a panel of 6 witnesses that all appeared remotely. Everyone was at home in the comfort of their own office, own tables, whatever, and they were being interrogated and hammered by congressmen and women for hours. And they were asked on whether the extreme volatility in shares of the struggling video game retailer GameStop exposed conflicts in the market structure that could hurt unsophisticated investors. And after sitting through a couple hours of it, I didn't watch the entire thing. I already picked out an MVP. I think this person stood above the rest, did the most, and, number one in my mind, 100%. And that goes out to my girl, Maxine Waters, for her hard-ass mentality throughout the entire hearing. She did not come up short in being a badass at all. You know, she was hammering to answer questions yes or no to people like Vlad Tenev, CEO of Robinhood, people like Gabriel Plotkin, Melvin CEO, who else? The Citadel CEO. And she wasn't holding back. And, she stated that many Americans feel that the system is stacked against them and that no matter what, Wall Street always wins. Maxine Waters, I think I love you. 100% I love you. Okay. So out of those 6 different people that were interviewed, I'm just going to kind of give a little breakdown of each one. High notes, low points of things that they said, things to look for, things like that. So to begin, I'm going to talk about my boy, Keith Gills. Now, Keith Gills is known on YouTube as Roaring Kitty, and on Reddit is known as, I'm not going to say his name, but it's DeepF ingValue, and you can just imagine, what's going in place there, all right? And the first thing that I noticed when it came to his him being questioned by congressmen and women is that he had his legendary headband hanging up behind him. And under that, he had a photo of a kitty that stated, "Hang in there." I think that's a little hint at some people, keep holding your GameStop shares. Maybe. I don't know. I could be wrong. It's just me looking at it. Okay. And I wasn't aware of this, but Keith Gills is a licensed security professional. That's unreal. I mean, he gives some crazy advice, his YouTube videos. If you haven't watched his videos, look into that because that man knows his shit 100%. And the thing was, he had no idea that GameStop would hit as high as it did. He thought it was maybe possible, but the probability was extremely low. But early on, he felt that it was a good investment opportunity, which it was. I think so. All right. When it hit around the mid-20s, he was expecting it to be mid-20s, maybe a little higher. But high 400s, mid to high 400s, no. He didn't expect that, but it happened. It is what it is. It's crazy. Now, he stated that with increased transparency, it would be extremely beneficial to helping understand how things work in regards to retail investors. So with these firms and things like that being more transparent with their work and more transparent with the things that they're doing behind closed doors, this would help retail investors have an understanding on, basic things or things that may seem basic to hedge funds, Wall Street firms, things like that the average guy may not really know. So I definitely agree with that. I think there could be a lot more transparency when it comes to that. But I guess time will tell. I mean, I don't know. We'll see. Next person I want to highlight is Melvin Capital CEO. Okay. Melvin Capital CEO, Gabriel Plotkin. First thing I saw, his office was so empty. Why was it so empty? Is he on the way out? I don't know. Does he already have his stuff packed in the printer box below his desk? Maybe he was donezo after the hearing. I don't know. But his office was absurdly empty. He had no photos on the wall, nothing on his desk. Maybe he was just embarrassed to, show off his office. I don't know. But he literally had nothing. I feel like I have more in my office than he did in his. I could be wrong though. We just saw him in the view that you're looking at me right now. We just saw that view. I don't know. Maybe he's got more behind the camera. Maybe. Okay. And I don't think that Melvin CEO is so much of a bad guy. Okay. I just think that he didn't cover himself very well on tail risk and ultimately got short squeezed. And we're talking finance here, nothing crazy. We're not. Okay. Now, what did happen with Melvin Capital is that they were blindsided by an army of Reddit traders on Wall Street bets. And he admitted that in order to overcome this, they're going to have to adapt, which is understandable. I think they should as well. But the way that they plan on doing that is a new data tool that was created to help keep an eye on the most mentioned stocks or most talked about stocks, whatever, on Wall Street bets. That's what Melvin Capital is going with. A data tool to point out what's being talked about the most on Wall Street bets. Shoot, Wall Street bets might, work out well for Melvin Capital and, kind of give them an upper hand on this, like seeing that people are talking about something going downhill. Maybe. I don't know. I could be wrong, but it is what it is when it comes to that. Next person that we have is the Reddit CEO. They got our boy Steve Huffman in on the hearing, which is great. I think he needed to be. I mean, it wouldn't have been possible. Like, none of this would have happened if it weren't for Reddit. And while he was being questioned, he threw some shade at CNBC. He didn't directly mention the 4 letters, but basically said that they encourage people on TV, they encourage people to make bad investment decisions. Do I agree with this? I don't know. Do I disagree with this? No, I don't. And that you can trust people on Reddit more because it's generally accepted by thousands and thousands of people. And a lot of the submissions and posts, especially on Wall Street bets, are more authentic. Like, the advice is based on those individuals' own knowledge, and that they wouldn't call into question the positions that they hold before talking about it on TV. And one of the biggest things with Wall Street bets, one of the rules is to do your due diligence. And if you go on there and do a post without doing your research, like, it's going to get deleted by the mods, like, people are going to shit on it. It's going to go downhill. So I think that, Wall Street bets does a very good job holding itself together when it comes to that. Another thing is that the trading on Wall Street bets, that type of activity, would not have met the definition of market manipulation. According to FINRA enforcement official Jennifer Sculp, I don't know how to say it, but like, you get the point. But yeah, she stated that they didn't meet the definition to say that there was market manipulation. How could they have done that? Okay. Last thing about Reddit, about their CEO, he stated that Wall Street Bets doesn't have bots to go and like boost posts like that. Like, though they do have bots like on specific things, or like if someone brings a bot into the chat, whatever, they have that, but they're not there like boosting the numbers, increasing the numbers, doing trades, all of that. Like, everyone in Wall Street Bets is like authentic, and it's like an actual person calling the shots here. I think so. I know so. Yeah. Then we have our boy at Citadel, Kenneth Griffin. I don't like Kenneth Griffin, in my opinion. One thing about Citadel, though, is that it's Robinhood's largest trading partner. What? The largest trading partner of Robinhood is Citadel? Are you serious? So they claim that there was no prior contact with Robinhood about banning these Reddit stocks. And when asked if they were to and then when a congressman asked if everyone in Citadel were to be questioned about this, like in a court of law, that every single person would give the same answer, that there was no contact with Robinhood prior to the banning of buying these securities. Kenneth Griffin, you might be on one. Having a hard time believing that. I think they should follow through with that. But I think it would be near impossible to really like question everybody. Like, in Citadel, there's so many different like departments and areas. Like, it would be near impossible. Maybe. Lastly, we got our boy. Our boy, I don't even know if I'd say that. But we got Robinhood CEO, straight out of Bulgaria, Vlad Tenev. And Vlad Tenev's hair during that hearing, his hair was on one. Would I kill to have that kind of hair? Maybe. Probably not, but like, he's got some very identifiable hair. And I think his hair said more than he did throughout this entire hearing. And one thing about Vlad during this man would not answer questions directly. I mean, more than once we saw Maxine Waters hammering him. Vlad, yes or no to this question. Answer this question, yes or no. Did he? No, he would go into some crazy spiel and say, oh, thank you, whatever, thanks for the question, and then just totally avoid it. And that was extremely frustrating to watch. But just answer the questions, bro. Just answer the questions, yes or no. We all know the answer, but we just want to hear him say yes or no to the questions. And he didn't. He did not. And even when asked about the liquidity issue that Robinhood was, in quotes, not facing, he wouldn't give a yes or no response to that. Bro, yes, we know that there's a liquidity issue. Just say it. Quit hiding it. Just tell us yes or no. And one thing that he said that stood out, he claimed that, in the long run, Robinhood investors had made $35 billion. But when asked to put that into perspective, he wouldn't do that. The congressman that was hammering him on this, put these numbers into a return on investment for me. He wouldn't do that. $35 billion doesn't mean anything. You can make $35 billion, but what do you lose? How much was invested? He would not give those specific details, which was extremely annoying and frustrating. Yeah, people made $35 billion, in the long run, all the customers on Robinhood. But how much did they lose? How much did they lose specifically when it came to GameStop, AMC, Nokia, BlackBerry? My man couldn't answer the questions, no specifics whatsoever. And then when asked about if investors made more or less money in the aggregate than they would have, if they would have invested in S&P 500 ETF, he claimed to have no idea. I don't believe that in the slightest. And I think, if you have the opportunity, go back and, look up this question when he was being asked it, and he just wouldn't do it. He wouldn't share how much customers' investments have grown when compared to other investments. It was so annoying. Vlad, bro, come on. We know you didn't sleep at all the night before, but just come here and be honest. Just like our boy Keith Gills. I highly doubt Keith Gills really, prepared all that much. I could be wrong, but, what do you have to prepare when you come there and just tell the truth? But Vlad went more out of his way to avoid the question and, just move on to something else or change the subject quickly or answer with something else than he would have to just answer yes or no. Frustrating, right? Okay. One thing I did respect, though, he did address the Alex Kearns suicide, which happened earlier in 2020. And I mentioned that in the episode where I did talk about Robinhood. And Alex Kearns, 20 years old, woke up and saw that he had $730,000. He had a $730,000 margin call. And, he took the steps. He immediately made a call to Robinhood. And if you call Robinhood, you don't talk to someone directly. You call it, it's an automated voice message system saying, do you send us an email? We'll get back to you soon. You need to have people there with the answers right away, especially when it comes to something like this. Waking up with $730,000, you have to owe that. And you couldn't get a response. He sent emails, but by the time that they were addressed, it was too late. And one thing that Vlad did state, or a couple things Vlad stated regarding this, or steps to prevent this from occurring in the future, they plan on changing the Robinhood user interface, which I think is a good idea. Okay. And then they planned on hiring an options education specialist. Another good idea, because this was based entirely on options. Like, he made this money or lost this money. And in the end, like, it was all a mistake on Robinhood's part. But, they plan on going about hiring option education specialists and then having a live phone-based customer support. Thank you. That right there, like, if you're going to put a ton of money into a company without any sort of like immediate contact to someone there, like, it's a red flag. Obviously, it's a red flag. Like, people are putting hundreds of thousands of dollars into this company. If something were to happen, like, you're not going to hear anything back. I went through a problem a few weeks ago with my account, sent him an email, and I didn't hear anything for 4 days. 4 days. And by the time the 4 days came, I was already frustrated. I was like, whatever, I don't care with Robinhood anymore. I'm donezo. The liquidation is coming soon. And then he wanted to hit on clarifying the display of negative buying power, which I think is a smart decision. Okay. And then, Vlad claimed to currently have no educational tools and support to help people on their investing journey. When a question was asked about how Robinhood discloses the potential downside risk of investing. They make investing seem like it's win-win-win all the time, but don't show the bad side to investing. The bad side that literally everybody has faced at one point in time or another. I faced it, I faced it very early. Like, when I first started investing, I took a fat loss, but like, it is what it is when it comes to that. Like, that's how you learn, in my opinion. You learn through mistake. Sometimes. I mean, when I closed my account, I was sitting on a fat loss. An unreal fat loss. But, there's potential in the future for me to make up those losses. And then also, the capital loss on my tax documents come 2021. I don't think this is gonna be all that bad. Maybe, hopefully not. Say a prayer for real. But yeah, I just think that Robinhood can go about things so much differently. I think that Vlad could have answered questions more directly. And I don't think this will happen again in the future, especially for the more like experienced investors who have now transitioned out of Robinhood. Now, like I said, like, you can pay $75 to have all of your stuff transition to another brokerage firm, but there comes a wait. Like, I've talked to people and they've been waiting for like 2 to 3 weeks on their stuff to transition from Robinhood to Webull, Robinhood to Fidelity, Robinhood to TD Ameritrade. And God only knows how long it's going to be until I get my money in my account from, liquidating it. Who knows? We'll see though. Maybe. Okay. Last thing I do want to hit on is something that I noticed today, is that GameStop on their website, they're now dipping their toes into the PC gaming. They're dipping their toes into PC gaming now. They have a whole tab on their menu. You can buy different types of PCs on there, like parts for building it. So they're supporting that, which I think is cool. But I still think that's not entirely like enough to continue to support them in the future. Like, I think it will, but definitely no justification on a mid to high 400s valuation. Definitely not. That's what I think. That's my little spiel for today's episode. We're about to hit it right on 30 minutes, which is ideal for me. It's great. Okay. Now, if you have any questions regarding this, any questions regarding investing, regarding the hearing, anything like that, reach out to me. And that's justchrispodcast@gmail.com. You know the deal. Episode after episode, I'm shouting it out, getting emails. Love to hear them. Love to hear from the fans. And that's where I'm at. That is where I'm at with this week's episode. Guys, thank you so much for listening. If you're listening to this on Spotify, Google Podcasts, Apple Podcasts, whatever. Shout out to you. The video version will be coming up hopefully by the end of the weekend. Shout out to Scott Barker. You're the man. And that's what I got for today's episode, guys. Talk soon. See you all next week. And deuces. See y'all.